Success is not necessarily monetary. Yes, we want to have financial security, but I think the financial security comes when you're just trying to be a servant leader.
You work with a lot of small businesses, so what's kind of a common thing you see that might be a mistake they're going to make?
They don't plan. And so one of our philosophies has always been that tax projections and tax planning during the year, we really don't want a client that we see at the end of the year and they're just bringing their tax return and that's it.
Really wanted to buy that business, but either I didn't feel good about the books, or it took them too long, or they couldn't explain, and yeah, I can see that being a big turnoff.
If you get into where a buyer's coming in and they say, give me your financial statement, and the financial statement doesn't look anything like the tax return, they can't prove anything, you really need to tell your audience, you got to be careful. You got to do everything the right way, because you got some people that are just haphazardly putting it into place, and that's where y'all come in to help them, which y'all do a great job.
Welcome everybody to Save Yourself Podcast, brought to you by Unlimited Wealth. Today I'm sitting here with Mike Schwallie and our favorite certified public accountant, Mr. Clay Hagler. Welcome.
Well, thank y'all for letting me come on.
Glad you're here.
Yeah, absolutely.
Clay, would you start out and kind of just tell the listeners about your background, maybe briefly about how you came up, what led you to accounting?
Yeah, I got you. Well, once I graduated from college, I kind of took the track to work for, at the time, it was called one of the big six firms, which was Deloitte and Touche, and then worked there for about 10 years and then slowly gravitated to starting my own practice in 2005. And then from there, we kind of serve middle market clients, and also have gotten some fairly high wealth clients too that we serve. So we're kind of a little bit of a boutique firm. And so hopefully we bring some complex tax strategies to to help the, not say common folk, but maybe not necessarily the high income individuals that some of the bigger firms will serve. And we do have some of those too. So
just from, being a client, all these years, I just commend you on your team. I was emailing with one of them yesterday, and not only do you guys do fantastic work, but everyone there cares, and that's huge.
Yeah, and we try to. I mean, I think that's been part of our success over the years, is trying to kind of have unprecedented availability, and that's something that's kind of dying a little bit in today's world, and so we're trying to still implement that as best as we can. And so far, so good. I'm very blessed to have the staff that I have, and they kind of keep that philosophy up.
They do a great job.
So for you, Clay, you work with a lot of small businesses. So what's kind of a common thing you see that might be a mistake they're going to make during the year in their business and their practice? Yeah.
Well, what we see a lot of times is just a planning. I mean, a lot of CPAs have the same tax strategies that we implement. We hope that we have a few that they don't, just because they're competitors. But a lot of times you just see where they don't plan. And so one of our philosophies has always been that tax projections and tax planning during the year, we really don't want a client that we see at the end of the year and they're just bringing their tax return and that's it. We have found over the years that if that occurs, then you're not going to have a client for very long, because if they are successful, they're going to know a big tax bill and they're going to be not prepared for it, and they're going to kind of exit and go to someone else. So
point the finger at you.
That's correct. So the tax planning is something we see where when we pick up clients too, that they just haven't been doing it, and it's somewhat shocking that they don't even know where they are during the year. But that's one of the most common mistakes we see with small businesses.
Yeah, you're a humble man, and I commend you, because I've sent a number of clients your way, and a resounding thank you has come back many, many times, because, and a lot of those are real estate investors. So
right.
What do you see as good opportunities for real estate investors in that market?
Yeah, with real estate, it's one of the more complex, or has some of the most complex tax code written around real estate professionals. And so there's a lot of tax planning opportunities that don't get taken advantage of. Probably something that's a little bit beyond what we're doing here today, but making sure that your real estate folks know what the rules are to become a real estate professional, so certain losses can be taken, certain depreciation incentives can be utilized, and then making those making those tax laws come to fruition within their tax return. And what I mean by that is there's a lot of what we call, and this is kind of technical, but active and passive activities. And so you want the real estate professionals to have their losses when they buy buildings and stuff, especially in the first years when they're depreciating things, that they can take those losses. And so that's really a key component of the planning side.
How many real estate investors or business owners that are actively buying real estate do you have to, for the first time, or they hear for the first time about a cost segregation study? And how would you explain that?
Yeah, probably about 75% don't know what it is.
Right.
And a cost segregation study is typically when let's say you buy a commercial building, you depreciate it, or i.e. expense that building over a 39-year lifespan. Well, that's a long time. But if you put or get a qualified engineer, and sometimes the CPAs can do it depending on what type of building it is, but we would help the client determine that. But you do a cost segregation study, you can break out a portion of that building into a useful life that allows you to depreciate or expense a portion of that building over really in the first year or in the first 5 to 7, 15 years. So it speeds up the expensing process a lot, reduces the taxpayer's tax bill, and puts cash in their pocket so they can go do another deal. And, just to give you an example, let's say you had a commercial building. Well, your curbs and gutters, your parking lot, your landscaping and things of that nature, and there's a laundry list of things, all can be depreciated in the first year. And so you can get a huge tax savings for the real estate guy.
Counting on it.
Yeah, I got you. Yeah, Blaylock has put one in place, so we're going to reduce his taxes this year by doing a cost seg study.
Thank you, sir.
Yeah, you're welcome.
So, do you recall what year you heard about infinite banking and kind of your initial thoughts upon learning about it? I'm curious because you understand money, right. You understand taxes, you know the rules of the game is very well. When you first heard about infinite banking, what came to mind, or any first impressions that you had? Yeah,
golly, it's going to age me, but it's been quite some time since I heard about it. But I remember when I first heard about it, I kind of, probably like a lot of people that y'all come into contact, it's life insurance, and just kind of pushed it away a little bit. But then I tried to have an open mind. I said, okay, well, I need to learn more about this to make sure I understand it, because that's one thing that is key to our firm. We don't, if we hear an idea, we're not going to be arrogant enough to say we know everything. We want to understand and learn something. I mean, that's part of being a good CPA or any professional, really, learning new things. So at that time, which was quite some time ago, we got an Allen and Associate to teach us. You're like, what is this? So we went to I guess maybe what you want to call the founder, Nelson Nash's presentation, and we want to know about this. And so once we learned, we started having clients used it personally. So we invested in the whole life policy method and put our hands around it. And then I can't tell you how many clients we have that utilize it now.
Well, you're rare, because most we work with a lot of businesses, and not all work with you.
Right.
But when we do, we run up against some opposition.
Yes.
From accountants, because their job is to save their clients money that given year. But
that's right.
Like you mentioned, the planning. If you think long range, that's where IBC can play in.
Right. Well, whole life insurance, I mean, even without infinite banking concept, is an important part of, in my opinion, the financial planning for any individual. I don't necessarily buy into, hey, let's buy term, and that's it. I think whole life serves a great purpose for most individuals, whether you're using it for an infinite banking concept or not.
Protection.
Yeah. Protection is very conservative, meaning when I say conservative is what you're going to have at any given time. And that's important to a lot of people. So your investment strategy is not necessarily constantly going up and down or down, and fluctuating with the market parameters.
Yeah. This is a hard question, so forgive me. But if you, let's say someone is like, I really like this, but would you talk to my CPA? You being a CPA, would you explain it to them? Like, how would you, knowing the training and generally the mindset of your average CPA? I mean, everybody, they're all different.
Right.
People are unique. But how would you go about explaining it to another professional?
Which we've had to do before. Sometimes it's been successful, sometimes not. When you go into it, the one thing I say is, at any given time, if it is structured appropriately. So that's when you hear a lot of people selling life insurance. I mean, y'all know that. But you got to have the right person selling you the life insurance that understands how to structure the policy correctly. And when you start, and I'm getting probably too technical for this podcast.
No, this is fantastic.
But when y'all structure a policy with additional paid-in capital in it, where the money's going straight to the cash surrender value, we try to tell the other professional they are seasoning, is what we call it in our firm, seasoning the policy a lot quicker than a normal policy would be funded, meaning that your premiums you put in are going to match your cash surrender value a lot quicker. And then on top of that, we'll also tell them it's a little bit like a souped-up Roth IRA. In other words, your money's growing tax deferred. Your dividends are fairly consistent, especially if you get a good life insurance company that's doing it. And then at retirement, you can pull it out if you structure it appropriately, just like a Roth IRA, and it's tax-free. And then we get into the second component, which is it's liquid. And what we mean by that is if you have a business cash flow problem or something, a hiccup in your business or a financing need, whatever it is, even if you use funds from the policy to fund those capital expenditures or just, you need cash injection in the company for whatever reason, slow time or, bad year, whatever it is, that it's there instantaneously. You don't have to go to a bank. You don't have to show them your financials. You instantly can go to the policy, instantly get the money within, probably within the week. And then of course, you're going to pay it back, just like you would a bank. But at the same time, it's instantaneous cash that you can utilize. And I think that's important for any business that's trying to grow.
No doubt.
Yeah, the line of credit, essentially, that you're creating for the business to
That's
access
correct.
and control.
That's
the
correct.
control factor of it.
Yeah, and anytime you can control your money, if you've got it in, not to necessarily say the market is totally terrible, it's not. But I mean, if you need a liquid component of your financial plan for that reason, if you have it all in stocks and so forth, well, you've got to sell those stocks, and is it at the right time to sell those? So I think this is just a huge component that everybody needs in their, I guess you could say, their portfolio.
Sure.
Yeah.
Yeah. I mean, we saying the same thing, but we think about it as, hey, your savings, get some stability, some predictability
That's right.
out of your savings and leverage somebody else's money in a super safe way
That's
with
correct.
freedom and flexibility. And, in my journey as a business owner, that having flexibility when borrowing against the policy to pay it back, obviously we're not going to steal the peas.
Right, that's correct.
Like the grocery store. Let's go out. Let's check out at the front door. Because we're an owner of the company, so it's definitely help. We've watched with hundreds of clients where you're right. Businesses have cash flow crunches. They're the last to get paid. Do you ever feel like you're the last to get paid?
Yeah, sometimes.
That reminds me.
Yeah.
Yeah, I think I owe you money.
I think I owe you an invoice.
Yeah. Oh well.
We'll
No, the good thing about CPAs, though, we usually are doing your tax return next year, so we usually we might be a little slow, but we always get paid usually. So
That's right. Well, man, thank you.
Yeah.
Anything else you want to cover? Well, we got Clay in the house. I want to hit him with a ton of questions.
Yeah, for sure. So, don't want to put you on the spot.
no, you're fine.
But we get a lot of questions from business owners, real estate investors saying, hey, I own my policy in my name individually, and I'm going to borrow against it using the life insurance company's money, and then I'm going to loan it to whatever entity that they own and control. If it's for business purposes, is it, can you talk about like the deductibility of the interest in for business use,
Right.
and then just kind of talk about that and I mean, you've been doing this a long time, and so how do you think about that? How do you articulate that?
Yeah, and that's a question that comes up all the time, and the IRS is really particular about what is deductible business interest, and so there is ways to structure it where you can deduct it, but you do have to dot your I's and cross your T's, which y'all help those people when they're trying to structure this to do that. Make sure you have loan documents between yourself and your companies and so forth to deduct it. But I guess just to a simple answer is if it's structured appropriately, yeah, you can get the deduction.
Yeah, we get that one a lot.
Right, yeah. Now, what you do see that you really need to tell your audience, you got to be careful. You got to do everything the right way, because you got some people that are just haphazardly putting it into place, and that's where y'all come in to help them, which y'all do a great job of, to make sure that it is deductibility and they get it structured correctly, because if they just haphazardly do it and don't have note agreements and things of that nature, then all of a sudden, if the IRS did come in, they could disallow the deduction.
What are you seeing out there? So we're in October of 2023. Interest rates are up. People are still doing deals, but from what I can tell, they're being very careful. What are you seeing out there amongst the business owner community and the real estate community as far as their activity levels, where they're focusing, and what's working?
Yeah, that's an interesting question. We have a lot of general contractors we do, as well as just, your real estate developers and commercial and residential rental owners, I guess is what you would call it. Our construction companies are still, in this area, at least in the state of Alabama, are still doing really, really well. Good. I think their backlog is decreasing a little bit, but they're still going after it pretty hard. And then so far as the real estate, I'm still seeing my real estate developers buying properties. Good. You're seeing less financing from banks, and so a lot of the real estate deals we're seeing are actually cash deals. I don't necessarily know. I don't know if I have the money to do that, but we're seeing a lot of people that do. And so you're just seeing a lot of people pull their monies together and almost partner with each other to go buy these buildings. And so that's a great avenue. If you got money in a policy and you need to make it liquid, you definitely can do that to buy real estate. So
for sure. And it's amazing, when we talk about percentages, and one of the things that I feel like try to do a good job of is focus on dollars and not just, a percentage or interest rate. And we're looking at the profitability of a kind of like a specialized storage facility that this business owner is looking to deduct. And with the expected cash flows, what we found is that when you're financing 8%, it's killing it's hurting the profit a little bit.
Well, yeah, your debt service gets high quickly.
It's brutal.
That's why you're seeing, I think, less and less bank deals. Mm-hmm. Well, number one, the banks they're not lending.
They need deposits right now.
Yeah, that's right. They're not. Their lending capacity for the banks is shrunk significantly. Yes. Yeah, and so you're talking about not to go back to something we previously talked about, but a cost segregation on a mini warehouse or something like that. Woo, that's a home run right there.
Yeah. So. It's funny, and it's a simple question for you, but I get it once in a while from I've had some prospects, not clients, say, well, if I use that policy, I won't be able to deduct, my property or my asset that I'm going to buy, and obviously
that's not necessarily true.
Yeah. Good deal. Just want to take that off the table.
What advice would you give somebody maybe in their 30s getting going in business, to make sure that, like you said, they're crossing the T's and dotting the I's, or anything you've seen with all the people you work with? Is there anything they're doing, or if you looked at your most successful clients, like what about them, or what are they doing that makes them a standout?
Being meticulous and detailed and plan. The ones that are haphazard, and it's not that they don't care, but they don't take the extra effort to detail and ask the professionals and get with even if they don't know what to ask, the professionals will lead them in the right path. But you have to go and sit in front of them. And the ones that do that seem to always, they take the steps that you tell them to take, and they end up being successful. And I know that's kind of a broad answer, but the ones that try to go about it themselves and don't put a lot of thought into it, they usually are the ones that don't succeed as well as the others.
Makes total sense.
Mm-hmm.
I got an off-the-wall question, but I'm an older guy, and technology and me don't mix too well. But have you seen any new, speaking to that, being meticulous and keeping record, have you seen any new technology that's out there that's helped business owners or individuals be more meticulous, things they can use, or have you seen any tools out there?
Yeah, I mean, just your financial softwares, whether it's the QuickBooks or Xero's, another big one that they use. If they learn how to use those type of tools to keep track of their financial and whatever business that they have, and a lot of times we help them with that, but some of them go about it themselves. But if they're going to do that, they need to dive in and understand that, and those tools can make their life simpler in the future, and help them figure out exactly where they are. Because without a correct set of financials, you don't know how to plan. You got to understand and most clients look at their profit and loss statements, and, in a CPA, you'll look at a balance sheet first because that's the health of the business. Sure. I want to see what your debt is. I want to see what your debt service is. I want to see if you're upside down or your receivables higher than your payables, things of that nature, to determine whether you're going to be successful or not.
As compared to maybe 2020 or 2019, how many mergers and acquisitions are you seeing, people selling their businesses or buying?
We have seen quite a few since probably 17. It started escalating then. I can't tell you how many we've been involved in. When I say that, from a CPA standpoint, trying to help our client, when they get to a point when they are selling their company, the buyer is going to do their due diligence, and that means looking at quality of earnings, determining what a net working capital requirement is, all these real technical things. So we have to assist with that. And so we've been quite busy over the last 4 or 5 years because of the M&A market. You are seeing it kind of maybe slow just a little bit, and I think it has something to do with interest rates, because even though you got buyers with a lot of equity that, and money to inject into deals, a lot of them are still debt financed. And so debt driven, and so it is kind of, I think, slowed it just a little bit.
What about multiples and values? What's kind of been a short?
Your typical average multiple right now, you can see. Now we've seen some lower, we've seen some a lot higher, but right now if you're around a 7 or 8 multiple in most industries, some industries are different, but most industries are around 7 or 8. Now, if your revenue is less in a company, that's going to drive a lower multiple. If your revenue's higher in a company, it might drive a little bit higher multiple. But I'd say 7 and 8 is a good industry average for most industries.
For people out there who already have maybe a business or a real estate portfolio, a business that are thinking about selling within the next 5, 10 years, or probably less than 10, what are some things that they could do, that they can do now to really build? There's a good book called Built to Sell, but from your standpoint, your perspective, what are things that they can do to really enhance the value of that future sale?
Right. Well, one thing that groups that are coming in to buy love to see is that to make sure that company has the appropriate, what we call C-suite, CEO, chief financial officer, things of that nature. So depending on how big they are, if they need one, they need to have it in place, and a good one. If a little bit smaller company, which wouldn't be cost effective to have some of those people in place, they really do need a good CPA and a good set of financials that instantly when the buyer comes in and does their diligence, when they request that, if you can present that to them pretty quickly and you can defend those financial statements once they start pulling invoices, once they start testing those, if that is accurate, that gives a warm and fuzzy to the buyer, and they'll probably continue on with the process, and that is instrumental.
We hear a lot of people say, I really wanted to buy that business, but either I didn't feel good about the books, or it took them too long, or they couldn't explain. You know. And yeah, I could see that being a big turnoff.
Yeah, if you get into where a buyer's coming in and they say, "Give me your financial statement," and the financial statement doesn't look anything like the tax return, they can't prove anything, they're usually gonna leave and not buy it. And so people have to have a good set of financials and have to want to have a good set of financials, and that's the problem. Like, oh, what's it matter? I made this much money. Why would they not buy me? Because they can't prove it.
Right.
Yeah, if something they can't prove, they don't want.
I don't think about planning till it's too late.
That's correct. And what you do realize is if they do buy it, they're going to buy it at a discounted rate because they can't prove the financials. Then all of a sudden, you're wishing, hey, it wouldn't have taken me that much more time to put in the effort to make sure I had a good set of financial statements.
It's great advice.
Mm-hmm.
Another question that might be a little difficult, but you have a business owner out there. They've listened to our stuff and heard about infinite banking. They want to participate and use it inside their business, but they're uninsurable. What's something that you've seen, infinite banking or not, just insurance wise, that they've done inside their business to maybe help with that?
Well, I mean, if they want to use the insurance, products that y'all help them formulate and plan with, they don't have to be necessarily the insured. I don't know if that's what you're getting at, but
maybe inside the business is, I guess, what I'm getting at. Maybe a key employee.
Yes, that's exactly what I was going to say. And we have clients that do that. Yeah, it doesn't have to necessarily be on you if you're insurable. You can still use this concept, and you got all these other important people within your organization that you could insure and put this in place. Absolutely.
Yeah, a mentor mindset. If you have someone who's really talented that's working with you, pay them. Keep them. Hard to replace a really talented person.
Oh, yeah. And I've almost seen it come to fruition, too, before where, fortunately, it didn't. But we had a company with a key employee, and they did have key man life insurance on that person and went in the hospital, with an ailment. Fortunately, like I said, he got over it, but it would have been a disaster to the company. But he at least had some securities like, hey, I think people forget about that, Sure. We're talking about the infinite banking concept for investing reasons, but it carries another benefit too. That death benefit's important as well.
It's real.
It is.
Mm-hmm. It is real.
Checks the box.
It does.
Which plays to some advice you give the younger folks is that, hey, it is a line of credit. It's a lot of things that can be a benefit to some people, but death benefit is pretty important too.
Yeah, I don't think people realize too. Because they hear the term. By term, policies rather than whole life. It gets preached in different circles, wouldn't necessarily say what circles, but, it does. And the thing about whole life policies is you don't know when you're going to have a life setback. You get cancer, even if you recover from it, or whatever ailment it is, and you're uninsurable like we were just talking about, you want a life insurance policy for your family. And by getting a whole life policy, especially if you're structuring it for investment purposes, you're almost double dipping. You got both benefits there, and it's never going away.
Mm-hmm.
What are estate tax limits going to do you think?
That's an interesting question. I'll be honest with you. Ever since I've gotten into the CPA world out of school, I've never seen the estate tax limits drop. They've only continued to go up. But it is a strange world out there. I don't know. They could. I've seen them almost come back down one time, and there was a lot of scrambling going on. And at the last second, I can't remember what year that was, but I think it was during the Obama administration when it was set to sunset, and then they actually put it back in place at the last second, so it never did drop.
You got anything else?
No. Great.
Yeah, this was awesome. Final question.
All right.
Just kidding. So, Clay, how would you define success for you today? And then also, how would you have defined it 10, 15 years ago?
Yeah, I was fortunate enough. My father drilled in my head a long time ago, and I remember one time when we were actually going hunting, and we were driving to the hunting club, and I was just out of school, and I was talking about somebody making a bunch of money. And with his stern eyes, he kind of turns to me, and he said, well, define success. And it just made me pause for a second. So I learned real young, hey, success is not necessarily monetary. yes, we want to have financial security, but I think the financial security comes when you're just trying to be a servant leader and do what you're supposed to do to help others, and it'll come, probably in abundance.
Love that.
And so that's kind of been all my philosophy and from the beginning, but it changed real quickly. I was going down that road right out of school. It was like, oh, look how much money this person made. And my dad put me back in my place really quick. And so we've kind of stuck with that philosophy for a long time.
It's great.
That's great, man. Well, Clay, thank you. We appreciate your time
Thank you, man.
today,
Absolutely.
man. We'll have your link to your firm in the bio, so we appreciate it, and hang on tight. Hopefully some folks might be calling you
Okay.
there.
Well, we would love to help them.
Yep.
Thank you.
All right.
Well, thanks for everybody for Save Yourself podcast. We'll talk to you soon.
Okay. Thanks.